Welcome to the Small Business Banter podcast. I'm Michael Kerr, I'm your host, and I'm also the founder of Kerr Capital, where I work day to day with business owners. The Small Business Banter podcast is built for business owners and their trusted advisors at what I see as three different key stages of ownership in a business. It could be when you're looking to sell. It could be when you've been approached by a potential buyer unexpectedly. Or it could be when you're an aspiring owner about to buy a new business. There's a lot on the line personally and financially at each of these three stages. It's stressful, it's emotional, and it's usually new territory. So to help, each episode of Small Business Banter is a discussion between me and another business owner or experienced small business advisor, and they will have personally been through a business sale. What you'll get is practical advice, new ideas, and motivation to help you when making a really important decision about what to do with your business. So welcome into another edition of Small Business Banter podcast. Ben Twashinsky joins me today. Ben is the Managing Director of Judo Bank in Victoria and Tassie. Welcome in, Ben.
Thanks, Michael. Thanks for having me on the show.
Look, you manage a team of 60 bankers. We're pretty representative of the growth of Judo over the last few years. We were just chatting about our first meeting back in when Judo was, I think in your bio listed as a PowerPoint.
That's right.
And It was a startup, and you were right there at the very beginning. So you've overseen a lot of growth since then.
Absolutely, yeah. It's been an amazing journey since 2017, sorry.
Yeah.
Back when we first met till where it is today, it's been incredible and amazing to be part of as well.
Well, it is. We're gonna rip right into why you're pleased to be a part of it or excited to be a part of it, and why I think Judo's really doing an incredible job of funding small and medium enterprises. So. Do you want to just start with a couple of minutes on your personal background, Ben, and then we'll get into why we're chatting today, which is it'll be a discussion about what Judo does and why it's different to the big banks. We're going to talk about just why effective funding of small and medium businesses is so vital for not just the businesses but the broader economy. We're going to get into how you'd suggest the owner of a small and medium business could better prepare for a meeting with a potential banker, how they might, make more out of their existing relationship, how they might come across to talk to you at Judo, but, and your take on what is a good business credit, or a good lend. So could you just give us a couple of minutes on your own pathway up to Judo and what you do currently?
Sure. Started at Judo in January 2017, so coming up to 7 years ago, which is pretty amazing to think about it. So was one of the beginning cohort, I suppose, of employees into Judo, so banker number one, which I'm pretty proud of.
Wow. That is something to be proud of.
Yeah, absolutely. And then, from there we kind of obviously grew and grew and grew. But prior to Judo was at the major banks for the preceding kind of 8 to 10 years. Worked in the UK as well for a few banks over there, and kind of, as you can tell, always been in that banking and finance space. But my kind of journey at Judo has been incredible from 2017, coming in as that first banker, writing our first transaction, which we're really proud of, is actually still a customer of ours today, all those years later, and has grown considerably over that time. But I've had the fortune of spending the first year and a bit of really helping build with a number of the other starting team, and then went into what we call a regional director role, so looking after a team of bankers, which was our first group of real bankers that we went externally to hire, and then from there got the ask to pick up and move across to Western Australia and start up our WA business, which I did pretty much at the start of COVID, actually. So March 2020, which was an incredible time for all of us, living through that very strange time. But yeah, picked up my wife and 2 kids and our dog, and off we went across to WA and set up the Western Australian business, which was an incredible journey, literally starting from myself. Not
another startup almost, like it.
Pretty much, yeah. But
territory.
now my opportunity to really get it up and going, and obviously had the fortune of the backing of Judo at the time, but moved over there and started up in a little tiny shared office and started recruiting and getting out there into the market. So, and by the time I kind of left after just under 2 years, we were a team of 17 and supported over 300 customers and had our own office and really made our mark into WA, which was absolutely incredible. And then April 2022, moved back to Melbourne, where I now, as you said, managing director looking after the Victorian and Tassie relationship team. And here have an incredible team of it's not 60 bankers, but 60 bankers and analysts and our third-party team that are really out there every day supporting SME customers, along with our risk teams that do an incredible job. And we're super proud of the number of SMEs and the type of SMEs that we support in the market, which is really why Judo was why we were created at the end of the day.
Yeah. So if someone hadn't heard of Judo, what is it your tagline is boldly backing business, but what is it in a couple of sentences?
Yeah, well, I think, the name Judo kind of says it all, to be honest, and it's really taken from the Judo strategy, which is the martial arts strategy of being nimble, agile, quick, responsive, and it's a play on us being the small player in the market, being able to respond quicker to our competitors and really be there to support our customers, I suppose, at the end of the day. And I think there's a few things that really form our foundation. One is the 4 C's of credit that we follow, with character being the first one. So who we're banking.
We'll dig into that for sure.
Yeah, absolutely. Why they're so important. And then it's speed and being able to, that responsiveness around the Judo strategy. So being able to respond quickly to our customers. It's common sense, and it's really about having empowerment in the front line, so that our bankers have the ability to actually make decisions and support customers. So we in a nutshell,
Ben, by customers, I mean we're talking purely about small business customers, aren't we?
So we identify SMEs as businesses with turnover kind of up to $100 million there or thereabouts, and debt requirements starting at $250,000 and going up to $35 million. Majority of our customers are well and truly below that $5 million mark, probably average about $2 million. So,
in facilities.
Yeah. So we see a lot of, mum and dad operators through to those emerging corporate type customers, and really everything in between, which is what I love most, because you get to see so many varieties of customers out there.
There are hundreds of thousands of businesses that might potentially fit into that size range, right?
Absolutely. Well, we know that majority of our economy in effect sits within that SME space. It's where most employment is. It's where most type of businesses are. So it's absolutely a part of the market that really needs to be represented from a banking point of view, because it does require a lot of funding to do what they need to do.
And was the reason Judo started a bit of a statement about where lending to small business was at the time, or if not going back even earlier?
Yeah, I mean, I think there's really been this shift over, probably the last couple of decades anyway, to this, what we would call an industrialization of the banking market. And we've all kind of seen it, obviously, with the advancements of technology, which is a great thing, but it also is kind of to the detriment of SME customers who really want that personalised relationship experience banker who they can talk to about their business and what they're looking to do. And I suppose what we found, and one of the reasons why I suppose our co-founders, started the business, was because no one business is the same from the other. So how do you industrialize that whole process? Yes, you can extract information out of financials or an industry code or whatever it might be. But we all know a simple example I always love to give is you're lending to a cafe as an example. You walk into one cafe versus another cafe. They're same industry, same segment, but they're completely different. And that's really what we bring to life, is to understand how they're different and why they're different and why we should back one more so than maybe we should back the other one.
Yeah, well, so that cafe versus the other cafe might just be structured differently and not need finance. But I guess what we want to get owners to do is really, I have a sense that there's a lot of business owners that do think it's just too hard to even contemplate shifting banks, and there's good reason if you're locked in with a lot of operational accounts, trading accounts, but also I'm no doubt that there are ways and means to minimise the pain from that. But at the end of the day, if your business is growing, if it's and you're missing out on opportunities by not having a good banking relationship, well, you've got to ask the question and maybe go a bit harder at considering what your options are. And
absolutely. And I think I think in particular for business customers, you shouldn't set and forget your banking relationship. I think it's so important, no matter what you're doing, to review it and understand where it's at, and not only the actual facility itself, but that banking relationship that you spoke about. Because I think one of the most important things that we try and bring to the market is that trusted relationship. We want to be Australia's most trusted SME business bank, and I think when you do that, it means that you're there for the journey with the customer. And things happen in business. We all know, they need some increased working capital because they want to grow, they want to acquire a property, or maybe they want to do an acquisition or whatever it might be. And to know that you've got a banker and a bank on the other side that firstly picks up the phone when you call, so it's not going through to a call center, but actually picks up the call and knows you and your business, can really help the customer grow their business and succeed.
Look, I agree wholeheartedly, because there's I deal with a lot of small business owners, and I deal with them day in, day out, and they all face their challenges, and I think even as an ex-business banker myself, I've seen how it's a banking relationship could be so critical. And the banker could be a part of the team that is the team of trusted advisors to that business. And I can see how it is all too hard, and you just don't worry about it. But I saw for example, the annual review of a facility, which is part and parcel of banking, as an opportunity to further better understand how the business has gone, but more importantly, probably where it's going and how the bank can play a role in that. It's a bit like there's a missed opportunity potentially in the same way as with accountants. You go in and do your annual tax return and you get it done, you do all your compliance stuff, you feel good, but you've missed an opportunity to, if you've got a really engaged accountant, and there are some excellent accountants who can actually be part of that team that you need, and it's not a formal team, but it's when things are tough or when things are complex, it's very hard doing it all on your own as a business owner. So to be able to have a bit more of an open discussion with an accountant, a banker, or a business coach is so valuable, and that's
absolutely. And for us, we want to work in with that as well. We know we can't do everything ourselves, and not all the customers want us to. So it's how do we work in with them? But I think you're right. It's how do we, and whether it's the accountant or the advisor, how do we add value? What does it's doing the transaction is one thing, but it's actually adding value along the journey, and is what customers want at the end of the day.
Yeah, well, you bring another set of eyes to a business and its financials, and it's if you're not experienced in finance, maybe you're really good at running your business. You have an expert come in and tell you if there's some potential to take on some more borrowings or restructure it, because it could help the bottom line, but also help better position the business for whatever the opportunities are. And that comes as a banker or as an advisor, you've got to be curious about the business and got to want to see the business succeed.
Yeah.
What kind of businesses does Judo like? We talked about size a bit earlier, but do you span all sorts of industries? Do you stay away from some industries?
Yeah, so we're pretty much industry agnostic, so we don't really mind what industry it sits in, as long as it is that SME focus. It is probably part. So, our book is really comprised of lots of industries, lots of segments, everything from accommodation, food services, manufacturing, hospitality. We've got a fair amount in the financial and insurances sector. Professional services is a big part. Yep. So we absolutely love looking after accountants, financial advisors, financial planners, that whole space.
Yep.
We think we've got a bit of a niche in there. Rent rolls, so that real estate industry, transport. We also support a lot of customers with their property investment. It's a relatively large part of our book.
So that's the business property. So if someone buys a factory for their manufacturing business or an office for
that's
their...
right. Yeah. So we support them, acquiring their property. We call it a rent to debt strategy. It's where you replace that rent cost on the balance sheet with an interest cost, but also you get the asset on the balance sheet as well, and you can obviously start supporting and growing your wealth.
Not to mention securing your for some kinds of businesses, it's vital that you have confidence that you can be in that location for a long time.
Absolutely. Yeah, absolutely. It's so important. Because a lot of businesses clearly invest a lot in their property, where they are for their staff, manufacturing facilities, equipment, whatever it might be, and to know that you're not going to have to relocate and spend that cost is really important. So again, having that ability to speak to someone, from a bank and go, we're looking at doing this. Can you support me? And what does it look like? And I think that's where we feel anyway that we come into our own, in that we're not bounded by the strict policy / LVR requirements, loan to value ratio requirements that a major bank tends to operate in. We've got that common sense approach to how we look at things, and that's what we want, is for a customer to say, I want to do X, and then it's okay. Well, how do we support you? What does that look like? How do we
it's a different plan. It's a different attack on the opportunity, isn't it? To say rather than can you fit a round peg into a square hole, it's how you move the hole. That's a terrible analogy, but anyway, or reshape the hole. But so it's probably the thing that shines through in the conversations I have regular interactions with Judo bankers when there's a sale of a business and people looking for funds to buy a business, and the great thing is there is this focus on the business itself. But you've got the 4 C's. Do you want to talk through the 4 C's, which is really the Bible, or the operating manual for the way you go about your lending?
Absolutely, and it's really held us in good stead, I think. So we follow the 4 C's of credit. So character being the first one, capacity second, capital third, and collateral fourth. And we're actually quite specific that in that order. I think it's a really important part to note, because a lot of our competitors, they tend to go to collateral first. So what security are you going to give me? And the most often thing that we hear is customers go to borrow money, and that the bank on the other side doesn't ask who you are, what your business is. They just say, well, have you got a house? How much
can we get our money back if it all goes pear-shaped?
That's right. Yeah, absolutely. And look, as banks, that's what we want to do. We've got to manage the risk. We want to get our money back too. But the first thing absolutely that we look at is character, and it's always get asked the question, what does character mean? How do you actually define it? And it is one of those things that often it can be associated with the experience of the banker out in the market, and we're very proud of the experience that we have across our team with the bankers, because character can be one of those things. It's not he's he's a good guy test or she's a great lady test, but it's actually much deeper than that. And we really want to have a look at, what's their management experience, what's their skill set, how have they gone through the ups and downs of the economy and weathered those storms, and what does it look like on the other side? What advisors have they got in the business? How quickly can they recall what's happening in the business when we ask them questions about it? And for us, we always go out and meet our customers. It's a really big part of our assessment. So we walk.
That's a deep conversation about them and their aspirations for being in business. Perhaps some of the challenges they've faced and met, and
absolutely,
you only get that through talking initially.
It's exactly right. Yeah, 100%. And that's what I was talking about before. The industrialization has meant that a lot of finance banks and finance players are using technology to make those assessments, but the computer can't walk out to the customer's office and have a look at their business and have a look at their manufacturing plan or whatever it might be. And for us to walk the factory floor and actually understand who they are and what they're all about is really important. And a lot of, in that assessment, a lot of the time it's also us having a look at their history as well. So, their existing banking relationship, how has that gone? What does that look like? Their position with the ATO. We know the ATO, and if there's an arrears or a default sitting there can tell a lot about their ability and want to repay facilities. And it's not always a big no from us if there is something there, but it's just let's ask more questions. And the same with things like Google checks and credit checks. Like it's actually amazing how much you can find out about a business or a customer via a Google check. Simple thing like that.
Yeah.
So character is the first thing we look at. Capacity is the next one, and that's really all about how are they going to repay the debt and what does that look like. For us, we're very big into trading businesses, so we do hope obviously that the business we're lending into will continue to generate its revenue, meet its expenses, make money at the end of the day, and then repay our debt. So for us, it's having a look at that. But I think we have a very comfortable position to be able to take a stance against forecasts, because we know in particular over the last couple of years through COVID, there have been businesses that have taken a hit to their performance. So then, in combination with their character and getting comfortable with that, we have a look at the forecast and capacity for, how they're going to demonstrate to us that they can service the debt through their cash flow forecasts, whatever that might mean. And a big part of that is not, and we're not asking necessarily every customer they have to put it together themselves, because we know that business owners are good at being business owners and not necessarily financial analysts or accountants. So it's what support have they got around them, who's their accountant, who's their advisor to really help them along that journey, and how do they explain it.
Yeah, and look, I think you can tell a lot. That I'm sure we've both and all of us have seen a set of forecasts knocked up for the bank, and it bears no kind of resemblance to what the business is really capable of doing. And if you dig a bit deeper, the owner really in the end says, "Oh well, my accountant put it together." And so what you were saying there is that credible cash flow forecast, that if you were to probe the owner about the forecast, even if they're using advisors, they can tell you why there's particular assumptions, why there's ups and downs, and if you got a sense that they have thought about that, which is a lot of the reason for doing forecasting anyway, or budgeting, is we trying to get a handle as good as we can on where we're going to go and where there's going to be some bumps. But if it's someone else prepared it, that's not what you're after. You're after, the owner kind of being able to say, "Well, I endorse that." We're never going to get right, but it's degrees of, accuracy or credibility.
Yeah, and I think that's the big thing, and it comes back to my earlier point around relationship is, no one has a crystal ball when they're preparing a forecast. So we're not expecting it to be dollar for dollar accurate. It's more around what are the assumptions sitting in there that they get them comfortable and then ultimately get us comfortable, but also along the journey. So if we bank that customer and they're providing us the forecast, something doesn't go to plan, let's have that relationship with them that they can call us and go, "Ben, I've missed X," or actually even better, we've won another contract and we're going to keep growing. We need some more working capital. It's all about how do you build that relationship and trust together is really, really.
And both sides recognising that they're not dollar accurate, but they are. You keep refreshing them, and things do change, and I suppose underpinning all that is that the relationship you talk about, and therefore the communication that's needed to both ways to keep on top of things.
Yeah, exactly. So I might just quickly touch on the last two C's because I didn't touch on them before. So the third thing that we look at is capital. So in effect, that's capital in the business or out of the business. And I think, a lot of time, not a lot, I know a lot of times customers, will build their wealth in the business on the balance sheet of the business that we're funding. But then as they make more money, they generally try to diversify their wealth and make wealth outside of the business, and that's a really big part of our assessment. Is what does that look like? Have they invested in other businesses? Have they bought other assets? Have they invested in super, et cetera, et cetera? What does that look like?
Yeah.
And then the last thing we look at is collateral, and we have a position that some transactions need to be secured for whatever reason. They might be higher risk. They might be earlier in their growth phase. There's something in there that means that we need to take tangible property as security. But at the same time, we're very comfortable just lending wholly against the business with guarantees from the directors, which is quite a different type of lending. It's in effect cash flow or balance sheet lending against the earnings of the business with no tangible property sitting there. And that does require a more detailed analysis of what's happening in the business for obvious reasons. So, we can span the full spectrum of secured, partially secured, and then completely unsecured. So we really open up a different part of the market to customers that may not have previously, got access to that type of funding.
Yeah.
And I think, again, a lot of businesses we deal with, well, more often than not, they're wanting to grow. They've got the big growth plans, and their customer base is supporting them to grow, but they'll go to their bank and they'll want more working capital or more term debt, whatever it might be, and they've outgrown the amount of equity available in their home or in their commercial property, but they've got a really good trading business there that's generating income, has a value attached to it, or has a balance sheet, a strong balance sheet sitting there, and that's what we love. It's where do we go? Got an asset, property, great, but you've got a trading business, and how do we now start lending into that trading business and help them grow their wealth over time?
Hey there, it's just a quick interruption to the podcast, and it's a message from Kerr Capital, a supporter of the podcast. If you're a business owner thinking about selling, the worst thing you can do is jump into a sale process, advertise, and hope for the best. If you want to get a sense of what your business is worth today, what your options are to make it more sellable, then head on over to the Kerr Capital website and check out the value and sellability diagnostic. Now let's head back to the podcast. Is there a formula or at least some guidelines? If a business is producing surplus cash, which is very different to profit, but are there some guideline multiples or criteria that you can share with us about, if someone's producing $500,000 of free cash, does that mean that you could lend them half of that or 4 times that?
Yeah, it's a good question. So there's no real formula, I suppose, and every segment and every industry will be completely different as well. Accounting industry, for example, you've got recurring revenue, so you can lend against a multiple. And again, even within that, we will take the view of, again, like I said before, one accounting practice is very different to another accounting practice. And that could be as simple as one accounting practice is sole partner, one has multiple partners. So you're diversified in terms of who generates the income.
Yeah.
So it really does. There's no formula attached to it. We get asked this question a lot, but it really is case by case. And I think that's also what makes Judo quite different.
Or do you have? You're saying you're going to have a discussion with a potential client, right, and you're going to go to the bottom line, which is, in this case, what's your capability to service debt, and then have the discussion from there. So, that's a great start. And it's you don't want to take on more debt than you need, but you also don't want to miss out on, if you're at a stage in your business where you want to grow, you don't want to miss out. And I think there are businesses that are, as I said at the very beginning, that are just jaded and have not given up, but have gone, it is too hard, or they don't have those advisors and trusted relationships where they open up and say, well, I think I could grow this business. And I see it mostly when, and I'm dealing with owners who probably the large percentage of them are thinking about getting out, and so that then brings in who's coming in to take over the business, and then you always get both. You get another perspective, which is the buyer, and they're saying, well, I don't want to give away too much, but you can see that they're thinking, I can grow this with a bit of debt, and the owner wasn't, it's having those having those deeper conversations at least, and again, to just encourage owners to think about what you want to do with your business, and don't give up on the idea that there are cash flow lenders. I mean, there's an explosion in the range of fintechs where you can finance particular assets. You can break down your balance sheet and you could finance this, the stock bit or the debtor bit or the vehicles and equipment bit. Yeah. But that takes a lot of management, and I don't think for a lot of owners it definitely works for some owners, but for many, just to have a valuable have a banker who's got a relationship perspective on it is really important.
Yeah, absolutely. And I think that we've seen there has been an explosion in the fintech space, and they provide good solutions for customers when they need them, when the time's right, when it needs to be quick and quick access to funding. But I think you're right. I think it's, how is that solution right for the longer term relationship that we know a lot of business owners are looking for. And you touched on a good point. One of the things that we're seeing a substantial increase on at the moment is management buyouts or sell downs from the baby boomers who are looking to exit and find a way to get their capital out of the business. We're probably not seeing as many family members come through, so it's typically selling to the management team or external parties. And when that happens, it's you really need not only a great advisor, but a bank that can sit there alongside and help us structure something up that can be debt funded. And it's not always they're not always easy transactions to put in place, and a lot of the time it can fall over because of the funding. So to engage early with a bank and have those open conversations is really key.
Yeah, I think one of the outcomes of that is going to be that this vendor finance idea is going to come into its own, because I think it was talked about for a long time, but and a lot of owners just didn't want to partake. They just wanted out. And if you can't get out, or if the buyers needs, and it's not like lending to buy business is challenging, but it's not a bad thing if you've got the right people, and you'd look at them on the same 4 Cs. And
that's right.
But also, if there's a couple of, at least one, if not two, transactions I was involved with Judo, and the vendor did stay in the business by way of lending or keeping some money in the business for a period of time, which gave you, the banker or the bank, more confidence that the buyers are committed. The vendor, the seller, was also standing behind the business. So I think that it might actually start to bring home this idea that vendor finance is possible, but also really helpful in getting some of these businesses sold.
Yeah, we see some all sorts of structures, whether it's vendor finance, whether it's an earn-out, whether it's deferred payments, in a couple of years' time. There's so many different structures that you can go into these things with, that you do need someone there who can A, understand it, but B, structure it alongside what the core debt it looks like.
I mean, it's a nice, like it brings together the three key parties, the buyer, the seller, and the banker. So, if those three can't, get together and work it out, it's it ain't going to happen.
Yeah.
I read about, I'm not sure if it's a judo trademark term, but loyalty tax. Can you talk about, because what I want out of this interview is it's great to have a discussion with a proper small business relationship bank, and therefore I want small business owners and their advisors to know that I think judo, by comparison to the big fours, it's growing rapidly, but still there's many small businesses to go after. Loyalty tax is something I read about. I'm not sure if it was one of your founders talked about it or you. I can't remember.
Yep, it was our founder.
Right.
Yeah. So to be honest, there's a lot of companies that that do this out there. It's obviously where they look after their probably what I'd call newer customers over their existing customers for whatever reason, and I suppose penalise in some way, shape or form. Doesn't always have to be financially. Those loyal customers, whether they might be underappreciated or not cared for or whatever it might be. But we really want to make sure and we deliver hopefully day in, day out to not only our new customers, but really our existing customers and continue to deliver that relationship. And each customer is different. Every customer wants a different type of relationship with their bank. And it's really up to us to engage with the customer to ask, what type of relationship would you like? And how can we support you along that journey? And we do a whole lot of different things for our existing customers, whether that's engaging through our chief economist Warren Hogan, who delivers kind of week in, week out updated financial advice in an easy format to really understand and help our customers understand what economy we're sitting in and how we can support them, all the way through to having access to any real decision makers or people, I suppose, across our business. For example, I'm out there seeing customers day in, day out, understanding their business, all the way through to our CEO, Joseph, doing the same thing. So it's how do we continue to deliver that relationship and not forget about our existing customers, but continue to support them in addition to our new customers. And that's ultimately,
but I think
sorry.
No, sorry. But I think it's also what we're saying here is that if you're an existing customer of another bank, you may well be paying some additional cost or not having the cost might be you don't have the right structure and you're missing out on growth. So that's I guess again the plea is to say, at least start to have
absolutely
consideration of another banking relationship, and no one's going to deny that if you've got operating accounts and direct debits, and there's a whole lot of things that make it messy. But if the tax is high, or in whatever form, then there's another way, and it doesn't have to be done tomorrow. But
that's right.
And I suppose you'd see. Judo as a bank would have a lot of customers that are in early stages of coming across you. I mean, you build relationships. It takes a while for everyone to get comfortable that there's a good relationship there, and you don't have to race to it tomorrow.
No, that's right. No, we're always willing and able to provide. Sometimes it's just a second set of eyes.
Yeah.
Going actually, and we do this. We will say to customers, you know what, that's a great offer. How about you take it? But at the same time, this is what we can offer. And this is how we can help. And it may not be now, but it might be 6 months or 12 months or whatever it might be. And this is the relationship we want to deliver to you.
Well, a fair bit of your referral work comes from finance brokers, I understand. So is that another really effective channel for owners to they might we didn't talk about finance brokers, but a good finance broker who can understand the market and some of the potential opportunities for a business owner. Is that a good other entry point to a better banking relationship aside from just a direct approach?
Yeah, so we deal a lot with the finance broker market, so they've been a big part of our partnership, I suppose, since day one. We engage predominantly with commercial brokers.
Yeah, but that's what I mean. But not just, but mortgage brokers is with housing finance is not what we're referring to here.
Yeah, that's exactly right.
Small business lenders.
Yeah, that's exactly right. Now we're not playing in the standalone home loan space, so that's not our market. But yeah, absolutely, commercial brokers play a big part of the market, and a large portion of our opportunities are generated from that part of the market. And we have great relationships with our brokers out there they understand what we offer, but they also understand what else is on the market and how that can best support the customers. At the end of the day, what we want is to look after great customers, and if that comes via a commercial broker, fantastic. If it comes direct to us, fantastic as well.
Yep. Yeah, you don't mind. What's the your economist Warren Hogan puts out a monthly report, but where do you see the small business? I mean, it's such a broad thing, but how do you see the next 12 months, or how does Warren see it in terms of confidence and output and productivity?
So I won't speak for Warren. I'll give you my views. I think there's no doubt about it that all the interest rate rises that have happened over the last 12 months, the inflation in the market, the labour pressures are starting to bite a little bit. We're definitely seeing that. But I think one thing, and Warren does say this a lot, is that the Australian SME market bounces back. And like I said at the beginning, the SME economy is the biggest part, one of the biggest parts of the Australian economy. So to be out there from a bank and support great businesses is absolutely really important. We will, and we're seeing this now. The labour market has absolutely, from what we're seeing anyway, eased up slightly. More migration has come in. So in terms of a post-COVID world, so that is helping free up labour to go into where it needs to go.
Yeah.
So I think that's a really positive thing. That still wages and retention of staff is a really big part of what we talk to our customers about, because they're balancing that out as well. So it's all well and good to get a staff member in, but actually keeping them is really important. So they're looking at that as well. I think that the property market is something that everyone's watching pretty closely. The rates have gone up so high, but I don't think really in any or many capital cities there has been a movement of prices as I think people thought. So the supply is really tight and the demand is still there. So the prices are holding. And I think, I think in terms of sectors, I suppose that we're watching over the next probably 6 to 12 months. I think the building and construction sector, I don't think anyone could doubt they've gone through a bit of trouble, and what does that look like going forward? Retail as well. What's that going to mean to discretionary spending as people's purses get a little bit tighter? So we're having a look at that. So there's whilst there's still things going on in the economy and probably bubbling away, we're still confident that we can be out there supporting as many SMEs as possible with their funding. You
haven't got enough SMEs yet.
No, we haven't. No, and I think in any economy, whatever is happening, there's always great operators that you want to support.
I talk to them day in, day out, and I wrote an article recently which it was based on some ABS data which talked about the balance sheet of the average Australian family household, and so no surprises. Primary residence came in number one, and then there was the managed investment super, and we're really rocked me was you get to furniture and household contents was, I think, 7% of household wealth, and then underneath that was business equity at 6%, which is pretty. Like, there's a whole lot of things that you could argue about that, and there's a lot of businesses that, you know, have got minimal value. But the point of me bringing up is that one of the ways that, you know, we need to recognise that business, small business, is not for everyone, but there's a lot of them, and it's a pathway to building wealth, and it's not the 10x kind of, you know, super growth. It's building steadily for a lot of them, but also that when a bank's prepared to back a business, for me it says there's actually some equity value for the owner, and some market value for, you know, by way of, you know, buyers looking at these things. So I just think that was like a shocking kind of stat that really you know, made me wonder about, you know, where small business is. Everyone talks about it being the backbone, but you know, Judo's doing something about that by lending. So, you know, kudos. Ben, look, I think that's is there anything you wanted to add about Judo? I mean, I'm shamelessly plugging that, you know, that owners that listen should, as a minimum, question how effective their current banking relationship is. Yeah. But, you know, if there's anything else, you know, that's probably not a bad time to, you know, wrap it up.
Yeah, look, I think, you know, just to bring it all together, I think it's, you know, we are absolutely dedicated to SME businesses, and we will continue building out our business that's here to support SMEs. We've got 18 offices around Australia, 125 odd bankers that are here to support business. You know, whether it's the industries that I mentioned before. We last year commenced our agri business. We've also got a health specialisation. So we've got so much experience, a wealth of experience across the business that is really here to support customers. You know, and it doesn't have to be a relationship right now. It can be for the long run, and how we build that relationship, which I think is, you know, ultimately really important. And, you know, we just want to be Australia's most trusted SME bank, and that trust means a lot of different things to a lot of different people. But ultimately, it's how do we deliver on our 4 Cs? How do we do it quick so we can give that confidence to our customers that, you know, whether it's buy a business, buy a property, grow, acquire, whatever it might be. And, you know, we genuinely think we do something different. And I think, like you said, sometimes it's just have a think about what your banking relationship means to you, and then what your banking relationship could mean if it was with Judo.
Yeah. No, I totally agree. The one thing I wanted to add, that notwithstanding Judo is a new bank, it's full of experienced business bankers, which is, you know, so it's worth, I think, you know, reinforcing that. And then you made an interesting point. Then, I mean, we're saying if this is if you're starting to question how effective your relationship is, you could talk to a finance broker, you could reach out to Judo, and it doesn't, as you know, you just hinted at, it doesn't have to be all in straight up either. So, but the point is to kind of don't keep paying a loyalty tax if that's what you're paying. Start to chip away at it. So, look, you know, keep up the work that you're doing, Ben. It's a mission, and you know, I'm really rapt that there is along with some other fintechs who are, you know, really making. I know that I've had clients that have, you know, special opportunities have come up. They've been able to tap into something that they might not have, you know, 5 years ago, or it would have been really hard and they would have missed the opportunity. So, you know, it's freeing up, and there are different ways. So I really appreciate your time. If someone wanted to reach out to you personally, Ben, where's the easiest way to find you?
So there's a few ways. So you can jump on Google and just go to judo.bank, and you can go to our website. There's a contact us button on there. You can ring us on 135836, or you can LinkedIn me, ben.Tashinsky.
Yep.
And I'll happily take a message and see how we can get in touch, obviously, and come out and see you and see how we can help.
Good stuff. Yeah, I mean, and it is Judo's in you're Vic Tas, but
yes,
it's every other state. So
yeah, that's right.
Yep. All right. Well, look, Ben, appreciate time. It was really it was great insights to Judo. So thank you for sharing them. Really appreciate it.
No, thanks, Michael. Appreciate you having me on.
All right. You take care. Thanks, Ben.
You too. Thanks.
Well, I hope you enjoyed that episode of Small Business Banter, and I hope it was helpful in helping you make the most of your small business ownership. To subscribe, to listen back, or to check out any of the resources or information we talked about on the show today, head over to the website, smallbusinessbanter.com.au, or you can search up Small Business Banter on your favourite podcast player. Don't forget to subscribe, and if it was helpful, tell another business owner about the podcast. If you think I can help you personally, please reach out to Michael Kerr via the website. There's a new episode out every couple of weeks. I'll see you then.